What is up, everyone? Inside this video, we're going to be talking about, is the market about to crash and are we heading into a recession? I'm going to be telling you guys my theory about the market right now, kind of like long-term fundamentals, some different things we have going on, and just, what we have for the future, what's happening, and how you can kind of brace yourselves as a trader, as a long-term investor, as a day trader, as a swing trader. I'm a swing trader. I'm kind of like more long term, so a lot of this is very important when I am inside of my positions. So right here we have the Nasdaq, which is the top 100 tech companies. We can see I use this to gauge the economy, this and ES, which is the S&P. We can see that we took the all-time high the other day, and then we've had this sharp pullback. This was mainly off of news. We've been getting a lot of bad news when it comes to unemployment. So we took the all-time high, and then we had this sharp pullback because of, I'm gonna go into that a little bit later. But when I look at this, the S&P, technically we are, still moving higher. A lot of people are saying we're overbought. We have been, in a very good trend ever since these April lows. Are we overbought? We can be, and I'm gonna explain it, right now. So when it comes to the overall market, a couple of things are fueling the market right now that can, we're kind of in a very interesting place when it comes to, number one, rate cuts. So the number one thing is rate cuts. That's what everybody cares about. That's what is kind of the theme of the market right now. Everybody's talking about cutting rates. The market always has a theme. At one point it was inflation. At another point it was tariffs. And now it's rate cuts. Everywhere, everybody's talking about rate cuts. Now, why are we talking about rate cuts? It's because unemployment is down. And if you guys don't really know fundamentals, when unemployment is doing very bad, when employment is going horrible, that means a lot of the times the interest rate is too high. And the Fed, whose goal is maximum employment and price stability, has to then cut interest rates in order to make the economy grow and for jobs to hire more people. That's basically the thing. So when jobs hire more people, it creates a more growth inside of the economy, leading this S&P and QQQ and a whole bunch of companies to do way better. IPOs do good and all that stuff. So that's why that's what's happening. That's why people like when rates get cut. So right now, that's one of the things that's going on. It's rate cuts. Another thing, though, that I'm a little bit worried about, and that's why I set the title of this video, is inflation. So inflation has been somewhat steadily growing. So when inflation, like I just told you, the Fed has a dual mandate, or two goals that it wants to do: price stability and also maximum employment. So in terms of the price stability, this mainly revolves around inflation. And you probably know about inflation. $1 today isn't worth the same as $1 in 10 years because of inflation. Inflation never goes down, though. Inflation always rises, but it rises at a certain percentage, and we call that the inflation rate. We want to keep the inflation rate at 2%. That's the goal that I think the government has given the Fed. It's a 2% level of inflation. Right now, though, it's at around 4. It's at around 4%. And it's kind of been going up the past couple months. So that's one of the worries. But the main reason why, stay with me now. Like, if you're kind of losing me a bit, I know it's a little bit of a lot. I'm kind of just like going over, thoughts in my mind. But if you're with me, the main reason why inflation has been going higher is due to tariffs. It's due to tariffs. Those tariffs that came out, a couple months ago, with the whole policy of tariffs on different countries and tariffs on this and tariffs on that, that has caused now inflation to steadily rise. And the Fed thinks that inflation is not going to last. Like, this rising inflation that's been rising steadily isn't really going to have any long-term effects. It's more focused on unemployment, which is why we're most likely going to cut rates. But in a scenario that inflation continues to be hot, we'll see next week and for the coming months. But if inflation continues to be hot, we can enter into something that's a little bit more scarier, which is, let me get it out here, stagflation, where we have two bad things. We basically have the worst of both things going on. We have unemployment plus high inflation, which leads to a very slow economy. Unemployment and stagflation. Unemployment and very high inflation. Now, most of us, like me, I haven't seen stagflation. I haven't seen stagflation inside of this economy, or I haven't seen it to like a very bad degree, because we've either been focusing on one of the two, especially since I started trading. But doing my own research, the last time there was like really bad stagflation was during the 1980s. I think it was 1980s that I researched it. And during that time, inflation had gotten so bad that they raised the interest rates all the way up to 20%. But back then, the Fed wasn't really, in control as much, but they raised rates all the way up to 20% to combat high inflation, leading to a lot of job loss and a lot of, it was a really hard time. So that's just like one of my fears of, CPI inflation going higher along with unemployment, which is why I am pretty long on gold, commodities, and let me show you guys what I'm positioning myself in. So with all of what I just said, what can we take out from it? Is the goal now to be scared of the markets and not even trade them? Nope. So for me personally, I still have a lot of, assets inside of QQQ. I'm very heavy on tech stocks. I'm very heavy on, ES. But I think that we could see sort of some choppiness a little bit. But if we do cut rates, I still think we can fly. It just depends on how inflation comes out these next couple weeks. But we can still fly, because what's boosting up the NASDAQ and what's boosting up a lot of, these companies still is their earnings. NASDAQ has had pretty solid earnings. Companies are still continuing to grow nevertheless. So it's still looking good out there. And NASDAQ too, AI has been a huge contributor to this whole move, to why the NASDAQ has been so strong and why the NASDAQ continues to do 20% year over year. So it'd be really dumb to try and be like, oh no, this thing's about to, topple all over. But I think with that rising inflation, it's just really something to watch out for. But me, I am really long on gold, and I think it's really good to have some gold exposure inside of, just your trades or your portfolio. Gold is one of those things that when everything is going wrong, you want to look towards gold, especially when we're talking about inflation. Another time where gold was doing really good was these January all the way through April. This was like when tariffs were really hot. the market was falling terribly, everybody flocked over to gold. And you can see, this is the start of 2025, and this is where we're at now. We went from 2,643 all the way to 3,000. This is an incredible move. And right now, we went into a range for about 4 months long, a 4-month long range, and now we're finally breaking out. And when gold breaks out like this back into an uptrend, you can kind of tell that something might be going on under the weather, which is why I am positioned to be long gold. I have a position that I got in. I called it out inside of my community. I got in down here, and I'm still riding this position higher because I think that if inflation continues to get worse, we can see more and more people flock over to gold. Plus, gold also does good when the dollar is not doing good. If we go over to the DXY, which tracks the dollar has been doing terrible since the start of the year because of the US economy. And gold basically does the opposite of what the dollar does a lot of the time. So it's a win-win scenario. Gold is like a win-win scenario right now for me with all of this. So yeah. Now, if you guys want to learn how to kind of like read and analyze the charts and be able to swing trade, similarly to me, I have my link to hop on a one-on-one call with me down in the description. Click on that link and it'll schedule you to talk with me. But that's it for this video though. Hope you guys stay safe and have a really good trading week. And I'll see you guys later.